Well, the market's focus today will largely be on the FOMC meeting, which is scheduled or slated for this week. And when we look at how global markets performed on Tuesday, well, largely a very tempered set of numbers from global markets. US indices rose slightly despite markets preparing for a hawkish Fed decision. We are expecting a 50 basis point hike in the Fed rate largely, and that's the consensus expectation, as well as what the Fed has been building up to over the last month or so. The Nasdaq, in fact, has had, or rather comes on the back of its worst month since 2008. April has been a torrid month for the Nasdaq, and the Dow gained around a fifth of a percent or thereabouts. The S&P 500 was up almost half a percent, but the Nasdaq rose a more tempered 0.22%. So a fifth of a percent of gains for the Nasdaq. So while US indices are in the green, it's a more tempered green for US indices as investors await the commentary around the FOMC meeting. When we look at Europe, well, major European indices closed higher with the oil and gas index gaining the most. When we look at the major European indices, the DAX was up around 3/4 of a percent, the FTSE was up around a fifth of a percent, and the Stock 600 was up over half a percent in trade yesterday. And when we are looking at how Asia is looking in early trade today, largely indices holding on to fractional gains, really small gains. The Nikkei, in fact, is down a tenth of a percent or thereabouts. The Hang Seng is down around 3/4 of a percent. But when we look at the ASX 200 and the Kospi, the ASX 200 is down around just 6 basis points, or rather up around just 6 basis points as we speak. The Kospi is up around just 4 basis points. So very tempered start for Asian indices. In fact, they were slightly higher in early trade today, and they've given up some of those gains as we speak. The Shanghai obviously is headed well in the green. It's up around 2.4% as we speak. When we look at the SGX Nifty, well, positive cues coming out of that one as well, up around half a percent or thereabouts. So good set of numbers currently as we're looking at the screen. Good set of or a good start expected from Indian indices as well. When we're looking at oil and gold, well, oil is well above the $103 a barrel mark. Gold has fallen sharply. Mind you, gold works inversely with bond yields, and bond yields have spiked up sharply. In fact, the 10-year US bond yield breached the 3% mark. So gold has corrected sharply. It's down to around $1,862 an ounce as we speak. Bond yields, the 10-year bond yield, as I did mention, breached that 3% mark. It's now just below that 3%, just 2 basis points below the 3% mark. That's at 2.98% in early trade today, and that will keep fluctuating as the FOMC meeting plays out and the comments from there come out as well. When we look at the crypto, well, all crypto assets are broadly mixed. Of course, it's going to trend lower. Very similar to gold prices is how crypto will play out when it comes to bond yields. So crypto is playing downwards. In fact, Bitcoin down over 1%, just below the $38,000 mark. But the US dollar has been in focus, and the dollar index has been continuously gaining traction. It breached the 100 mark in April, and now it's breached the 103, and it's well above the 103 as we speak. So currencies will also be in focus, of course, on the back of that FOMC meeting. Largely good cues coming out, tempered cues coming out for Indian indices today.